Hello, everyone. Good morning, good afternoon, and good evening to you, depending on what time zone you are tuning in from. I'm very excited to welcome you to another promising edition of our Forex Morning Mastery as we delve into the second half of the week. My own name is Sheriff Daramola, and for the next 1 hour thereabout, I'm going to be your host as we shall be delving into the financial market, reviewing how well the assets we're monitoring for this week have been doing, and of course, look out for structural setups that we will be using to navigate the market going forward. Since the beginning of the week, we have been monitoring three financial instruments as always, and this includes the US All Spot, which obviously in the last 3 days have not really seen anything significant. Same thing with the GBPUSD and of course the US All Spot. So we are going to be looking at this asset today. Let's look at how we can navigate the market around the structure and see how we can actually capitalize on our potential gains ahead of the second half of the week. And so far this week, personally from my own end, my portfolio is not doing very well, sincerely speaking. I lost some of the profits we made from last week, which brought me back to ground zero. And I usually see this as a retracement of our success. So success does not move in one way direction all the way to the upside. There are phases where we will see retracement moves, then movement again to the other side. So I see this as a retracement move. If you remember last week, the same thing also happened during the first half of the week where we lost about 3% of our account size. And fortunately for us, we were able to recoup the losses and, of course, made some profit on top of it. So I hope the same thing will happen this week. And on that note, I want to keep a positive mindset ahead of today's trading session, and I encourage you to do the same thing too as well. And it's also important to mention how important risk management is, especially in such scenarios where things are not going in our favor. So if you are at risk as little as possible, or you risk an amount that your emotions could manage, you will be willing and ready to take advantage of new opportunities, even though you are in the losing side of your portfolio. But if you are at risk too much, then you have a high tendency of missing out on opportunities that the second half of the week have in store for us. So this is very, very important for us to understand. And for those of us who are joining me for the first time, you are highly welcome on board. I'm very excited to have you around with me this morning. The Forex Morning Mastery is an educational avenue where we all come together to have a deep understanding into the behavioral patterns of market participants, and of course using this data in conjunction with fundamental factors to determine how we will be strategically position ourselves for the next move. The Forex Morning Mastery happens 3 times in a week. That is Mondays, Wednesdays, and Fridays. Same time, 9:30 a.m. West African time, 8:30 a.m. UTC. So you're highly welcome on board once again, and I do encourage you to actively engage in the comment section. And do not forget to also give the video a thumbs up along the way. Take a moment to give that video a thumbs up. This is one way you inspire me to do more. And of course, it also goes a long way in building this community, as the more likes we have, the more the likes tally with the number of people on board, the higher our chances for the YouTube algorithm to push our videos to a wider audience of traders. So thank you very much, guys. And on this note, let's delve right into the business. So as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. And based on the asset we are monitoring for this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. Though there are days where we did not have high impactful event like Monday, January 13th, but it didn't really had any significant impact on the market. So I will just focus on the high impactful event we've witnessed and what we are also looking forward to. So the first important event for the week did not come until Tuesday, January 14th. That was yesterday, and that was from the United States economic docket, and we were looking at the producer price index, a very important economic indicator detailing the average change in prices that producers receive for their goods and services in the last 30 days. It is also considered to be an indicator of inflation at the wholesale level. So this is one event majority were looking forward to as it will give an insight into the inflationary pressure in the United States. And what we saw was quite surprising as the data came in below what market participants had expected, which was at 3.8%, but the actual data came in at 3.5%, showing us that inflation in the wholesale level is not as strong as what majority are thinking. So the previous month came in at 3.4%, so it came in a little bit higher than the previous month, and this dampened the sentiment in the market, and we saw some profit taking activities on the US dollar, which obviously reflected on the chart as a retracement move. Now, going into Wednesday's trading session, that is today, January 15th, we are looking forward to a couple of high impactful events from both the United States and the United Kingdom. The one from the United Kingdom had already happened this morning at 7 a.m. UTC. That's about 8 a.m. Local time, and that is the consumer pricing index. In fact, this is one of the major key economic events that majority are looking forward to for this week. And why is that so? Well, it is considered to be a data that gives an insight into the inflation in any economy. It measures the average change in prices of goods and services in the last 30 days. When we are talking about consumer level, the producer price index is talking about the wholesale level. And if the CPI data comes in higher, it usually signals rising inflation, which may lead to central banks to raise interest rate, and this definitely will increase the value of their currency assets. But if the data comes in lower, this could show signs of lower inflation, and this could probably weaken the currency asset due to potential rate cut possibilities. Now, if we look at the data that came in from the United Kingdom this morning, we saw a 0.3%, 2.5%, and 3.2% respectively for the month-on-month, year-on-year, and of course the core consumer price index, all of which came in below what market participants had expected. And of course, we saw how the year-on-year and the core consumer price index came in below the previous month data. And for us, this is a sign that inflation is thinning out in the United Kingdom economy. And of course, this is further triggering triggering the potential for stagflation concerns, where the economy is slowing down. There's really no growth if we look at the GDP, and then there is rising prices, and of course unemployment rate still stays very, very high, and this makes the British pounds less attractive to investors, leading to a potential drop in value. And of course, we saw the immediate reaction to this event significantly before we started seeing some momentum in the last 30 minutes or so. So we are, for those of you who are the GBPUSD fans, we are going to be looking at this asset today and see how we can actually take advantage of what the market will present for the second half of the week. And on the GBPUSD for me too as well, USD so far this week, both positions I took went into a loss, and I'm hoping that I will be able to at least recoup the loss on the GBPUSD and probably make some profits on top of it. Now, later in the day, we are looking forward to consumer price index from the United States economic docket, where we had economists and market participants are projecting a potential increase index in the United States, which may likely favor the US dollar today. So we're looking forward to see what the actual data is going to be on this one. It's coming up 1:30 p.m. UTC, and that's about 2:30 p.m. local time. So you do want to be marking out this timing on your calendar, as it's going to be playing a significant role in driving fresh impetus in the market today. Then tomorrow, January 16th, we are looking forward to the retail sales data, another important economic event that everyone will be looking forward to, United States economic docket. Now, this data here is going to be coming in same time, that's 1:30 p.m. UTC. So you want to be marking out your timing on that one. This is a data that measures the total receipts of retail stores, and this goes a long way in representing the consumer spending in the United States. So its impact on market sentiment is also significant, as it provides insights into the health of the US economy, consumer confidence, and this could further influence expectations about the future economic growth. So mark out the timing, Thursday, tomorrow, 1:30 p.m. UTC. So these are the events we're looking forward to prior to our Friday session. So please mark out this timing on your calendar. Now, as technical traders, we all understand at this point that the anticipation of this event has its own way of influencing how market participants will behave. And of course, this will reflect on the chart as price action. So talking about price action, let's move right into the chart. And as always, the first asset we are looking at this morning is going to be the USOILSPOT. And remember, on Monday, we saw this engulfing bullish candle, which was an immediate reaction to on the Russian oil sector. For those of you who are part of the Monday session, you will be familiar with this, where we did talk about the Biden's administration sanction targeting nearly 200 vessels in Russia's fleet and major oil producers too in the Russian economy, like Gazprom and Sogotneft. I'm not sure I pronounced that correctly. And this obviously had raised concerns about supply disruption from Russia. And this led to this engulfing bullish candle on Monday. And as a result of this, we were all of the opinion that the path of least resistance for USOILSPOT will be to the upside. And in fact, we were clamoring for this possibility, as we were positioning ourselves right above the 77 and $77.45 area, though we had our positions triggered. But unfortunately, that position did not do very well, as we had all buy position closed at a loss. So for the US All Spot for the week, we are currently running in a loss at the moment. Hopefully we will be able to recoup this loss as we get into the second half of the week. Now, with this whole situation we have here, what are our chances right now? As you will see from the technical structure on the chart, that while supply disruptions from sanctions on Russian oil and a potential weaker US dollar support crude oil prices, US oil demand forecast, we have this reported recently, rising US production and a lower than expected inventory decline may act as a headwind, capping this uptrend scenario here. Now, before we go into the technical details on the US oil spot, let's quickly talk about the market drivers that is influencing the sentiment in this particular market. Now, we talked about the sanction on the Russian oil. We also talked about concerns about supply disruption from Russia as well due to this sanction. And today we are going to be looking forward to the US Consumer Price Index, where a softer than expected report is what market participants are expecting, though economists are suggesting that we could see something a little bit higher than the previous month. So this is one event that majority are looking forward to, and as a result of this anticipation, we may likely see extended sideways trading activities as major key players step aside from this market, waiting for this data to come in before making any aggressive bets. Now, talking about the other side of the pond, where there is yesterday, was it yesterday on Monday? I think it was yesterday, the EIA shared their monthly report where they projected stable US oil demand at 20.5 million barrels per day for 2025, and this could limit the potential for higher prices. So this is one factor here that I think could negate the uptrend scenario. Then they also projected that oil production is going to climb to 13.55 million barrels per day in 2025. Last year, it was 13.52 million barrels per day. So they are projecting an increase in global supply. And from our simple economics, when supply increases, what happens? Demand drops and prices will reduce, and this could exert selling pressure on oil prices. Then the one other factor again, I think that is all, and the potential for the CPI data too is still very there. If the CPI data comes in higher than what market had expected, it will definitely increase the value of the US dollar. And remember, the crude oil is a US dollar denominated asset, and this could probably make the crude oil very expensive for other currencies to buy, and this probably will reduce demand. Now, if we take all of these factors into perspective, how are the key players in the market digesting this information? If you would ask me from an outside perspective, I think that we are in an equilibrium at this moment. Market is in a limbo as market participants are not sure what to do at this point. Now, despite their sanction on Russia, the projection from EIA may cap this uptrend scenario. Now, as a result of this, you will see clearly on the chart that the market has been consolidating since the beginning of the week. Remember, we had the support line for the week at the $75.82 level, and the last 48 to 60 hours have seen price action confined within this range-bound structure to emphasize the prevailing uncertainty in this market at this point in time. Now, you know how we do it when we have a range bound structure. We do want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity, or break down the support line to give us an opportunity to sell. Now, if we take a deeper look into the structure, considering the resistance and support line, you will see that the resistance line had become a major barrier for buyers since the beginning of this week. Every breakout of the structure has always been met with strong resistance from the sellers, pushing price to the downside. And look at what happened around the support line, which was where price action started the bullish momentum for this week. Right here at the $75.82 level, we saw a significant drop of that support line here at the $75.82 area during the Asian session. And for me, this could be a signal that sellers have of pushing price to the downside. Now, in that regard, I'm opening myself up to the possibilities of a downtrend scenario. Now, if we take into account the range bound structure, you can see we have an ascending trend line, which is exactly parallel to that ascending trend line we marked out at the beginning of the week. Now, look at what happened to the ascending trend line within the range bound structure. You saw what happened. Price broke down the $77 area, came back to retest the structure, and in the last 3 hours, buyers have been finding it difficult to break through this particular structure, which for me could be a very good signal that sellers may be in to push price to the downside ahead of today's economic event. Excuse me. And as a result of that, I already placed a sell order. If you look at the trading panel at the bottom of your screen, you see I already placed a sell order at the $76.64 666 level. So I'm going to be moving my stop losses right now. Let me just secure this position at its entry point. We never can tell what will happen at the moment, so let me just secure the position and be hopeful that we will be able to recoup the losses we incurred on this asset during the first half of this week. So at the moment, I want to maintain a bearish bias. I have my TP target around the $75 area, which is about how many pips? That's about 160 pips to catch here if price action goes that far. Now, as soon as price gets into the support line here at the $75.82 area, maybe let's say around the $76 area, just close to that level, I will be moving my stop losses again, secure some more profit, as I will be monitoring how the market will react to the zone between the 76 and the $75.82 level for new trading opportunities. Now, let us picture the possibilities that could happen around that particular area. So if price drops into the zone and we begin to notice buy pressure here, and considering this area has a strong memory for buying power, and also considering the potential for supply restriction from Russia, we may see a demand from this area that could push price to the upside. So this is one reason why I have decided to move my stop losses further if price gets into that area, to monitor what happens around that area. So if I see a double bottom structure around that area, a head and shoulder pattern, or a falling wedge, I will be willing to buy the breakout retest of the structure's neckline. However, if price action goes ahead to break down the structure and retest it, then this could signal more selling ideas that could probably break down this ascending trend line. So this is what I will be looking at today. Let's see what happens going forward. Now, if we get taken out of the sell position, of course, that can also happen. Price could continue the uptrend from this area and we get taken out of the structure at break even. The only condition that will make me start considering buying is for price to break out, retest the structure. I would like to see a retest of structure before jumping into an uptrend continuation above this $77.45 area. So that is what I will be looking at today. Trust me, I will be updating us on my TradingView and Telegram platform if any of this scenario happens today. So that is my simple view on the US All Spot. I hope I made myself very clear. If you have questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before moving on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and hopefully, you've marked out those levels that we identified on this chart. They're going to be playing a significant role in guiding our trading decisions today. And while looking at the structure again, I'm beginning to notice another support line around this area, which also justify why it is compulsory that you move all stop losses to secure the current sell position if you are in it. So I have the $676.40 level, an area which you can also look out for new selling ideas only if price breaks down and retest the structure. Can we join another sell idea from this particular area? So for those of us who missed out on the first sell position, this could be another opportunity to capitalize on new selling ideas. So please mark that out and be on standby to capitalize on these opportunities. So moving on to the next asset on our watch list. Stay tuned in, guys. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And the British pound continues to face substantial pressure from economic and fiscal concerns. And then we also had a strong US dollar at the beginning of the week, but at the moment, the US dollar is doing some retracement. And I think that is why we are seeing this old choppy market condition that has been characterized with this market since the beginning of the week. Now, let's quickly talk about what we were able to identify here on the 1 hour time frame, that is our execution time frame. We had a range bound structure, if you remember, where we saw price confined within the 1.2200 level and the 1.21250, and then we decided that we will be either selling or buying. If price action breaks down the structure, we consider selling, and if price breaks above the key level, we consider buying that asset. And look at what happened. We sold here on Monday. Price moved about 25 pips. I didn't move my stop losses. I got taken out in a loss on that one. And then we also saw the breakout of the key level at the 1.2200 area. Price move about 47 pips. I didn't move my stop losses out as well. Price, I got taken out of that position at a loss too. And a couple of times again, I did bought again, was taken out of that buy position. So on the GBPUSD, I'm still on the red right now as we continue to monitor how price is going to be reacting to this descending trend line. Remember, we marked out this trend line on the 4 hours time frame. Okay, for the sake of clarity, let's quickly look at this, and so that we can see how important this trend line is in relative to this current structure. So this is the trend line here on the 4 hours time frame after capturing the character of price action since December of last year. And look at how that trend line was serving as a support for the downtrend scenario we acknowledged here. Now, ever since the week began, you can see price action had continued to trade around the trend line with no signs of a clear direction at this point in time. And this is quite understandable, especially when major key players are looking forward to significant economic data from both economies before making any informed decisions. And as a result, they probably stayed aside from the market waiting for this data to come in, and this is why we are seeing this extended sideways trading activity. But one thing I will say here is that we are at a crucial juncture, considering the fact that the trend line and our key level shares a beautiful confluence. And if we look at things from a theoretical standpoint, it appears that buyers may likely win this negotiation as time goes by. And why is that so? Well, if we look at the lowest point price action has gotten to this week, around the 1.2100 area, the next attempt by sellers to break through the structure appeared to have failed. As you will see, as soon as price got into that 1.215, buy pressure resumed from here, giving us a higher low that shows that we are likely seeing a temporary uptrend scenario, which has led to the breakout of both this key level at the 1.2200 area, and of course the trend line here at the trend line here at this structure we are seeing here. So, and if price continues to trade above that key level, we definitely want to hold on to a bullish bias. So at this point, you can see I have a buy position trade panel at the bottom of your screen, but it's still running in a loss at the moment. So hopefully we see price gain some traction. I think this traction will not come until the CPI data is near. So major key players are waiting for this data before making any aggressive bet at this juncture. Now, considering selling the GBPUSD here, I will need price to break down both the descending trend line and this ascending trend, and that will give me a beautiful confirmation that sellers may likely be coming back into play. So by the time price comes below the trend line, it's a good opportunity to sell, and in fact breaking down that temporary ascending trend line further emphasize the strength of the sellers around this particular area. So we have a beautiful setup to guide our trading decisions going into today's trading session. So I would like to acknowledge that temporary ascending trend line on the 1 hour time frame, which is our execution time frame. So let me do that quickly. Bring out our line chart, and then connect the series of higher lows here. So this trend line here will play a significant role. So let me give it a different color to emphasize its importance at this juncture. So this is the trend line here, the purple one on your screen. So as long as price remains above the structure, we shall maintain a bullish bias, and we're looking forward to add more buy positions if price breaks out of the 1.22500 area. And hopefully the softer US dollar at the moment, the US dollar remains near its weekly low, which has been influenced by the softer US producer price index we saw yesterday. And if this persists, the pound sterling could take advantage of this to build some momentum. And if this leads to the breakout of the structure, we will be looking at buying more to maximize the uptrend scenario. So that is what I'm looking at to buy the GBP USD today. Now, in as much as the structure is looking bullish, sort of, don't let's get carried away with that scenario. You know how we do it in this community. We always try to keep ourselves on standby for whatever opportunity the market presents. Remember, we talked about stagflation concerns in the United Kingdom. We also talked about the UK fiscal worries, the weak UK CPI data, and of course, rising borrowing costs. In fact, the surge in the borrowing costs in the United Kingdom has increased concerns that the government may need to cut spending or raise taxes, which could potentially restrain future economic growth at this point in time. So all of these factors for me could still cap this uptrend scenario. So we are never going to negate any potentials that sellers will come in. And the signal we are looking forward to that will tell us that sellers have come into play is for both of those trend lines to be breached and broken to the downside. So we're looking forward to sell the breakdown retest of the key level and that descending trend line to join a bearish move. So that is what we are looking forward to today, and trust me, I will be giving us updates on my Telegram platform about 30 minutes or so before the CPI data from the United States. We'll look out for structural details on the 15 minutes time frame to make our entries easier. So that is my simple view on the GBPUSD today. I hope I made myself very clear. If you have any questions or further clarifications, feel free to let me know in the comment section. So I will see you in 10-15 seconds from now. Cheers. All right. So, in the absence of no questions, I want to assume that we are all on the same page. Please mark out those structures. In as much as the fundamental factors is pointing at a bearish move, structural details on the chart still shows potentials that buyers still have a chance of rising a little bit, maybe before the CPI data comes up today. And in that regard, we have a buy position running at the moment, which is unfortunately in a loss, but we are opening up ourselves the potentials that sellers could come into play anytime, and we've marked out structures that we are going to be using to navigate that bearish expectation. So let's keep our fingers crossed, and I wish you best of luck on the GBP USD. So with that being said, here we shall be moving right into the final asset on our watch list for today. Stay tuned in, guys. So the final asset on our watch list is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, for those of you who are following me on my Telegram and TradingView platform, you must have seen the technical update I gave us on the 15 minutes time frame. If you had done so, you definitely must have a buy position triggered at this point in time. Like you can see in the trading panel below, I have a buy position triggered. Hopefully this will help us to recoup the losses we incurred during the first half of the week. So well done everyone who had capitalized on that opportunity. And if you have that buy position running right now, please, I would advise that you move your stop losses. Let's secure this position while we continue to monitor price action around this particular area. So I will just do the same thing too from my own end here. So I just moved my stop losses to break even while we monitor price action. So that is that on that one. So at the moment, what are the chances that this momentum will continue? Well, gold's price movement still remains subject to the upcoming US Consumer Price Index data, which is expected to influence the Federal Reserve policy expectations and, of course, the demand for the US dollar. And this will go a long way in providing further direction for the gold commodity. So that is why it's important that if you have a buy position triggered at this point, move your stop losses, secure this position while we wait for this event to happen. Now, before we go into the details here, let's quickly run through the decisions we made at the beginning of the week that led to where we are today. Now, if you remember, the week started on a strong bearish note. We saw price started the week and then establishing a resistant line around the 2,693.50, as you will see here. We had the resistant line here. So this was the resistance established for the week. And we saw a little bit of choppy market condition where price action was confined within the 2,693.50 and the 2,679.50. And of course, if you remember on Monday when we were analyzing the structure, I think we were around here on Monday when we were talking about the structure, and I did mention that we are likely going to be selling the breakdown retest of the support line, which was what happened. I think about an hour into the New York session, and of course we were able to scoop over 200 pips. And if you remember vividly, we had two sell positions. I updated us with a structure on the 15 minutes time frame. Let's quickly look at it together. We had a structure on the 15 minutes time frame. I think I still have it here. Let's look at it together. Okay, this is it right here. Yes, this is it right here. So this was a structure we were using during Monday's trading session. So we had the first sell position triggered at the 2,686. Then we added another one at the breakdown retest of the 2,679.50. We rode it all the way into the 2,664. I think I had about 300 pips in profit thereabout. But unfortunately, yesterday's trading session took away most of the profit we made during the week. And I'm still very hopeful that we will be able to recoup the losses we incurred through the second half of the week. We still have about 3 days to do that. And if you remember last week, the same thing also happened. Monday, Tuesday's trading session took away the profits of Monday, but on Wednesday, Thursday, and Friday, we were able to recoup the 3% loss and of course made another 3% on top of it. So I'm hopeful that it's going to happen the same way this week. It's not a rocket science anyways, but I'm just hopeful that we will be able to replicate what we did last week. Now, during yesterday's trading session, I gave us a new update on the gold commodity after observing price action do a recovery during the Asian session, and this led into another choppy market condition where we saw price confined within the 2,674 and 2,669 area. So this was the range bound structure I updated us with during yesterday's commentary updates, and we saw a sell triggered. You see a sell triggered here, about 40 pips. I did not move my stop losses. We got taken out of that one in a loss. We also had a buy triggered here, was taken out in a loss on that one too. And at this point, I begin to become skeptical about this whole setup, and had another sell here which did not do very well as well. So I had to abandon this setup, and then look at what happened during the Asian session. Price finally broke out of the structure. I was fast asleep when this whole situation happened, and price had moved over how many pips now? Over 120 pips. If you are lucky enough to capture that move, well done, kudos to you. I took it from here, and hopefully we could still see more rooms to the upside. So that is how we have been able to trade the gold commodity so far this week. And though we're still struggling on this account, but let's see how today is going to play out on this one. Now, talking about today's trading session, what are our chances today? Will this momentum continue to the upside, or are we going to be seeing a positive report from the US CPI today that could incite some bullish traction in favor of the US dollar? Now, let's talk about the drivers for gold commodity. What are the things that will be influencing this market, at least for the second half of the week? Presently, the US dollar is hanging near the weekly low at the moment, and for me, I still think it is a retracement of that impulsive move we've experienced in the last 1 week. Let's be hopeful that is the case. And this downtrend scenario we are witnessing on the US dollar could be as a result of the softer US producer price index we saw yesterday, and could turn out to be a key factor that could lend support to the gold commodity. Then on the other side, we have the geopolitical tension. Yesterday, Ukraine launched its largest air attack on Russia since the start of the war nearly 3 years ago. And this is a geopolitical risk at the moment, where major key players may feel comfortable moving their capitals into safe haven assets like gold. Then Israel also launched strikes on Gaza and intensified its bombing yesterday, killing at least 13 people, according to reports from the news. And this event might continue to increase demand for gold as a safe haven asset. So for these two scenarios, a potential weaker US dollar and geopolitical tension, the path of least resistance may seem to the upside. However, we will not ignore the potential that the dollar is just retracing and could continue an uptrend move. And if that is going to be the case, it is reasonable that we move all stop losses on the gold, secure the positions while we monitor how the US dollar is going to behave. Now, another thing that we have the risk on sentiment, risk on market sentiment as well. There is now, as at the beginning of the year, there was this narrative that the incoming Trump administration's policy might likely increase inflation, and this had favored the US dollar at least for about 2 to 3 weeks. Now there is easing fears about President-elect Donald Trump's disruptive trade tariffs, which remain supportive of the risk-on mood at the moment and could probably cap the uptrend scenario in gold. Then we also have the growing acceptance that the Federal Reserve will pause its interest rate cutting cycle later this month, keeping the US Treasury bond yield in positive light, and could also act as a barrier for gold prices to rise. And then the CPI data today will also play a significant role in this market, as we're all looking forward to what the actual data is going to be like. So traders now look forward to the US Consumer Price Index report for more insight into the Fed's policy outlook, which will drive the US dollar demand and provide some meaningful impetus to the gold commodity. So depending on the outcome, this could either support or undermine gold prices. Now, in preparation for this event, what are we going to be looking at? What structure are we going to be using to help us navigate this market today? For those of you who are with me on my Telegram and TradingView platform, you must have gotten this update here that you are seeing on your screen right now. So this is what I was able to come up with after monitoring the character of price action since the New York session yesterday. You can see we have a couple of trend lines here, which further buttresses the strength of the buyers at the moment, though we had a breakdown of this trend line here. But the series of higher lows here still shows that buyers still have a room to continue that uptrend scenario. So I personally bought the gold around the 2,682 350, somewhere around here, and then I updated us that we will be looking at adding another buy position at the break of the 2,683.50, and with a stop loss below the trend line, which is about 35-40 pips max. If you would ask me, let's see how far this momentum is going to go. And I did updated us earlier that we should move all stop losses on the buy positions to break even, just in case. We never can tell, anything could happen. This trend line here could resist continued buy pressure, and if this happen, we may see price break down this second ascending trend line to incite selling ideas to the downside. So let's be mindful of this. Secure your position if you have your buy position still active, and then I want to continue monitoring price action around this area. Now, the only condition that will make me consider selling, that is if the market begins to bank on the risk on sentiment and the expectations surrounding the Federal Reserve policy, and the CPI data comes in positive in favor of the US dollar, we could see selling ideas from the breakdown retest of that trend line, which lines up with this $2,683.50 level. And if that happens, we want to be part of the bearish move. I want to see a breakdown retest, and if price goes ahead to break down the 2,678, then we will be willing to add more sell positions to maximize the downtrend scenario. So that is the only condition that will make me sell the gold today. Now, if we sell and price moves close into the 2,678 area, please kindly move all stop losses, secure the sell position while we wait and see how the market will react to the 2,678. Remember, this level was broken this morning after finding selling pressure around this area. So resistance may now turn out to be a support line. And from a theoretical perspective, when price breaks out of a structure like this, we expect that it may come back, retest the structure in an attempt to continue that uptrend move. So the uptrend is still very much intact. So selling here will be a counter trend opportunity. So between here and here is about 45 pips thereabout. So if sell comes in and we join as soon as price get close, we move all stop loss to secure the position while we wait and see how the market reacts to the 2678. If double bottom happens, we are willing to join an uptrend move, and if price breaks down, retest the 2678, we do want to be selling the XAUUSD. For the go-go challengers, we are going to be scalping this market today together. So hopefully to see you in about an hour and a half from now. We haven't been doing very well scalping the gold market this year at all. Hopefully we can do something today on that one. I look forward to seeing you guys during the go challenge. So I think I made justice to the gold commodity this morning. I hope I did. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And don't forget to give the video a thumbs up. Click on that like button. Take a moment to click on the like button. You are doing me a lot of good and of course helping the community to grow. Thank you very much guys as you do so, and I'll be seeing you in about 5-10 seconds from now. Cheers. All right. I see you, Adeni Babalola. Good morning to you. Glad to have you around. I saw your comments. I'll take that as a compliment. Thank you. All right, everyone. Thank you very much for the support. For those of you who had clicked on the like button, I really appreciate your support to this community. And thank you for inspiring me to continue to do more of this. So it has been a splendid moment with you guys today. We were able to run through all of the financial assets on our watch list, including the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we have been able to mark out simple trading setups that we are going to be using to navigate this market today. Well, I must confess it has not been a rosy start to this week. We are not doing very well at the moment, and that's, of course, we need to acknowledge the fact that we are in an uncertain business, a business where we cannot really predict what the future will bring for us. And whatever decision we make is more or less an educated guess. And because of this in mind, you want to always make sure you have a well-defined risk management strategy. And if you do, it does you a lot good, as you have the willingness to stay faithful with our analytical approach. But if you are risking too much and the market does not go as expected, you will be engulfed with fear to continue to stay faithful with the approach. But if you risk something that your emotions can manage, even if it doesn't go your way, you are ready to go back again and join whatever direction we have marked out in this community. So I hope you marked out those levels accordingly on your chart. They are going to be playing a significant role in guiding our trading decisions today. Let's just exercise patience, allow the structures to mature, and I wish you the best of luck on this one. And for those of you who are joining me for the first time, you're highly welcome on board. I hope you are able to gain a couple of things through the course of the session. And if you did, you want to be part of our subsequent editions, trust me, The more time you spend with us in this community, the better you get to comprehend my analytical approach, which definitely will go a long way in helping you making your independent trading decisions. So it's on this note, I would like to wish us all the best of luck, and I look forward to seeing you guys same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and of course prepare for the final trading day of the week. See you guys. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.